Equity markets have had a really rough ride over the past 10 days. Since the announcement of the massive bailout package in Europe, equities have taken a real tumble, even though there have been some positive economic data coming out of the US and company earnings results have also been positive. However, the big issue is the big spending cuts that will need to be made in Europe and what effect this will have on European economic growth, but also the flow-on effects for the greater global regions. This has been on the minds of equity markets over the past 2 weeks, and this is the reason why we have seen the big tumbles. Equities in the US fell by over 4% in the early part of last week. However, they did make a minor recovery on Friday afternoon. With markets taking a real tumble over the past 2 weeks, currencies have also been hammered down by the general risk-off environment. The New Zealand dollar was trading between 71 and 73 cents against the US about 2 weeks ago, but last week was hammered down to a low of 66.5 at one point. US bull and cow prices fell sharply over the past week. This has been a result of the turmoil we've been seeing in global markets, as well as an increase in marketings of US beef. Wholesale prices in the US have been increasing over the past few months, and this is now starting to flow through to the retail end of the market. There is typically a lag between the two. It will be interesting to see what the impact is on demand based on an already cost-conscious US consumer. This is including the backdrop with falling chicken prices recently, which are now becoming very competitive against beef. A lower New Zealand dollar will have offset lower US prices, and this is pretty good news for New Zealand farmers. Over the past week, we have seen New Zealand schedule prices increase.